I've been running some kind of algos for the past couple of years, at least since 2018 or 19. I started with having algos to alert me of trades, kind of get me going when I was traveling and trading at the same time. And eventually I moved to full-on algos for part of my trading. They're running automatically 24/5. I set them up once, change the settings about once a year, and then they run and kind of go from there. Thought it'd be cool to share an update on the stats of these algos, what returns we've been making this year, especially since we just launched a MT5 version of these algos. So basically they don't run on MT4, which was really outdated. They now run on MT5, which makes things a lot better. So I thought it would also be cool if Alejandro, who's the one who developed the algo, and he's the one who maintains the algo also, my full-time coder, really an algo trader with a lot of experience, came here to discuss the results and share with you what the returns were, the PNL, of course, the stats per month, a bit of the behind the scenes of how we run these algos, and a few more things that could be cool to share with you guys about these algos. He's just going to come and share these details. You can learn from his experience, and I'll catch you back at the end.
Hello traders, today I will be sharing with you updates for the Algo Nation portfolio that we are running now on the MT5 platform. If you don't know me yet, I'm Alejandro Perez. I am head of the Algo Nation program here at Desire to Trade, and I basically am in charge of anything that has to do with algo and algorithmic trading here in Desire to Trade. So today we're going to be looking at the 2-month update of the Algo Nation portfolio. It's been 2 months since we released the MT5 version of the Algo Nation portfolio, and we will be taking a small look at how things have been going. For the past 2 years, we have had the MT4 version of the portfolio, and in December last year, we released an upgrade to MT5 version. So we have transitioned from going from the MT4 platform to the MT5 platform, and that has allowed us to get some more robust testing, and as well as allow us to build some useful features for the future of the portfolio. So here we are looking at from December 11th to February 11th, which is basically the exact 2 months mark from when we launched. So December 11th was the date in which the portfolio went live in this real money live account that we use for tracking the portfolio, so that we can know that we're getting something that will be as close as possible to what our members will be getting if they decide to use the example portfolio for their trading. So that was the December 11, that was the date in which we finalized the validation, the testing, and we put everything into there. As you can see, it had a very slow start with the first week, essentially just having a small up, down, nothing. And then afterwards, in the middle of the month, it started to go up, had another plateau, and then a bit more up. And there, just the plateau continued until the end of the year. And then we had a great start of the year in January. And then after that, we had a drawdown period for most of the mid-January. And then it was another plateau. And then we had another big jump up here before the end of January, which allowed us to have a good performance in January overall. For now, for February, we started with a good performance, and we can have it of drawdown. The markets have been crazy these past months, and many of our other traders I have talked to, they say that it's been a lot more difficult to trade them. But with the algos, we have been able to, yes, we have ups and downs, but everything is for now within what I call my normality, in terms of everything looks similar to what it looked in my models and in my testing. So I'm happy to continue with it, and there is nothing that needs to be changed yet in the case of the overall main parts of the portfolio, statistically speaking. So for me, there is no worry about the performance of the portfolio as of yet. And even with these difficult market conditions that we have had in the past couple of months, the algos have been performing reasonably well, have had a good start for now. Here we can see that for December, we had a small profit. So we saw the equity curve and we passed one by the parts. But here we see, the monthly total picture. We had a 0.74% on net on December. So it's a nice slow start, nothing too crazy. Then in January, we had the biggest part of the month. So we had the move up in January there. We had the 3.18%. And now in February, we have a slight drawdown there. But everything is part of normality, and we have a good amount of constituents of the portfolio, which we're going to be talking about shortly in there. So far, the algo has been taking 151 trades in this period of time. And we can see that the drawdown, it stayed within less than 5% in there, which is very well within parameters. And that's something that my target drawdown for the example portfolio at the base 1% risk per trade is closer to 15 to 18% as maximum. But my target drawdown for the example portfolio at around 1% risk per trade. So the base stats of the portfolio, my target is close to 15% drawdown. So that's what I'm target. So right now we have just started. We have not had that much time yet to pass, but the things are staying within that range. I like to see it less than 10% most of the times, and we are right now at the maximum drawdown for now has been 4%, and we have had those ebbs and flows in terms of the performance. So that has been pretty good in that side on my book. Now from here, we're going to be looking at the current constituents of the Algo Nation portfolio. So currently we have a total of 8 constituents. That is 4 pairs running the Secretariat strategy, which is one of our strategies. It's the swing trading strategy, and the other side trading the BBR strategy, which is the Bollinger Band reversal strategy by Etienne, which is our other strategy. As the name implies, it is more of a reversal strategy. For the portfolio, I have decided to stick as a base level to the H1 timeframe. So all of them are running on the H1 timeframe. And for the Secretariat, we have AUD USD, GBP Japanese Yen, NASDAQ, as well as GBP USD. So those are the 4 symbols that are currently running on the Secretariat. And each one of them has slightly different settings than the other. They're all tailored for the markets that are slightly different. So they all have their own special settings for them. In terms of the BBR, we have USD Japanese Yen, Gold, and GBP Japanese Yen. So as you can see, the algos have different symbols on each one of the strategies. The only one that we currently have shared is the GBP Japanese Yen, which is both in Secretariat and BBR running. So that means that we have 2 different charts, one with BBR in the GBP Japanese Yen, and then another one with Secretariat in GBP Japanese Yen. And as mentioned previously, the same for BBR and Secretariat. Each one of the settings for each one of the symbols, it's different. So each of the symbols have their own personalized settings. Now, one question that I get relatively often is, why are we not trading more symbols or all the symbols available in my broker in order to get more profit with the strategies? There are several reasons for this. One of the reasons is that the more symbols you trade, you're also increasing the risk, assuming that we are having everything normalized. I like to put everything at 1% risk per trade, just because it's a really easy number to work with. You can multiply it by anything, and it's really easy to multiply, like for bigger numbers or smaller numbers to calculate, as well as it's an easy number to be able to add things into a portfolio. So the more things you're adding at 1% risk per trade, yes, things may diversify sometimes and they can decrease the risk. But oftentimes what happens is you reach a point in which adding more symbols or more constituents, as I call them, to the portfolio, instead of diversifying, they are adding into the drawdowns and it's increasing the risk. There is also the unknown risk part, which is what happens if things go outside of what happened in the past. Now you have an increased amount of risk as you have been adding more and more constituents to the portfolio. So at 8 constituents in the portfolio, the maximum unknown risk that we are having, it's a theoretical 8% if all of them decide to take a trade. And it's really very rare. I will be outside of what we have tested and outside of the model. But in that, we have to think of some of those extreme cases, what could happen besides the normal cases, as I call them, which will be what we have tested and modeled. So if you have 20 symbols in there, then you could have an event in which at some point, because market conditions are really wild or something change, you can have up to 20% risk. Maybe normally they are really sporadic in taking trades and they don't take trades all the time and they only have like 1, 2, 3% risk applied. But it can have that black swan event in which you get one of those cases. So that is one of those things that, yes, you can add more. You can probably have more profit as long as the settings that you are using for each one of them, it's profitable and leads to successful returns, but you are adding and increasing the risk. Now, the other part is because testing. My process for optimizing, testing, and validating all my settings that I am adding into the portfolio takes some time. So I have to get a compromise between spending all my days doing tests and actually running the portfolios. So what I do is get a portfolio that I am comfortable with, and as I test things along the year, I may be adding more things to the portfolio or updating the portfolio as I go in order to make it better, but to also have a compromise of, you can spend all your life testing, but if you never implement, you're never going to get the benefits of the things. So that's part of the process. It has to fulfill my process, so that's a personally imposed thing. It's all just part of the process that I can be adding more in the future. And for now, we only have 8, but that brings us to the next part, which is what are we going to be doing next? What's happening in the future with Algo Nation portfolio? One thing that we could do if the portfolio is running properly and it's within what I call my normal distribution of results, that things are happening in terms of statistics and equity curve within my parameters of what I tested, validated, and modeled. And then I add some bands, like upper and lower bands of, like this, it's getting too much more into drawdown than what's expected, or this is getting very, very good returns, more than normal. Good returns are good, but also if they are not in the normality, then that could mean that there is something there that will make the thing less reliable for the future. So I have to be inside those bands of what I will expect. So as long as things stay there, one thing that you can do with portfolios is to just do nothing and let the things run and reap the benefits of that without having to add extra effort in that. For me personally, I like the testing process. I like the validation process. So while I may not be doing it all the time, I do it in sprints or sprinkles along the year in order to improve my portfolios and to add things. So in that sense, for me, I have just finished testing and I am in the process of validating a new settings that I will potentially add to the portfolio coming next month. And for now, what I'm showing you here is just some results from one of the latest optimizations, but this is just to show you that I keep working on things and I keep doing the process, and I am saving several tests so that I can go into the next step, which is my validation process and then the portfolio building to see what we have. Does it match with the portfolio? Will it replace something that is existing in there or not? Currently, there is a case in the Algo Nation portfolio in which, in the increased volatility that we have seen in the NASDAQ index, in the US market-related indexes, there have been some cases in which if you have an account size which is relatively small, you may not have been able to take all the trades due to leverage. So I am investigating that and considering, for the sake of our members and for the sake of the purpose that I mentioned before, transparency of this tracking account, it's meant to be something that could be replicated by most people. That means that if most of our members are not able to get all the trades from the portfolio, that means that there are no longer trading what I tested, what I validated, because there are less trades there. There's something happening there. So in order to do that, I am considering potentially removing the NDX symbol, which could be one of the changes. And if that's going to happen, if the volatility continues to create that case in which you will require a increased amount of account size in order to be able to trade all the trades, then I will be looking at, okay, I have this tested, I have these things, I will be adding one of them to replace that, and I will probably be adding something else into the portfolio as well from what I have tested. This is something that I'm going to probably be adding more constituents into the portfolio as we go along the year. And then my natural process tends to be that I remake the whole portfolio around 1 time per year, a full portfolio redone. So this is a slightly different process in which I will be modifying and adding the portfolio in a more constant way as I continue to test, continue to improve things in a more small incremental process, just to keep things active and keep testing so that we don't get complacent with the markets.
really hope you got a good behind the scene look at these algos and how they run and how we actually use them to boost our own trading results. These require no time once they're set up. You do it in maybe 2 hours. Most people who we give the algos to are able to get running pretty fast, and they can get their own settings to be able to just plug in the algo and run it right away directly. These are the settings you've seen here in the video. If you want to get your hands on these, if you want to trade with these algos and set them up on your own account, also learn the behind the scenes of algo trading, a bit more about how do you run backtests, how do you test different parameters, how do you build a portfolio that's really strong. To make this either a part or your whole trading eventually, then check out the link below. We have a program, it's called Algo Nation. We'll dive into how to use these algos, and of course you get these 2 strategies directly to use on your own account. We'll guide you through how to set it up. We'll guide you through how to adapt the settings over time. And even if you want to get funded by a prop firm, that's also a possibility. We'll guide you through how to manage your risk, how to set up your portfolio in a way that's going to be not correlated with other traders and that the prop firm will like. And we can go into details on that if you want to. So check out the link below. Algo Nation, it's a program we have for this. Got some really good success. As long as you set up the algos with the same portfolio we have, you'll get the same results that we have because everything is fully automated. There's no second guessing. There's no back and forth. There's no kind of trouble. And if you want to, you can also go beyond and create your own portfolio over time, which is a big task, but can pay really well over time if you want to. Big thank you to Alejandro for sharing this up over here. Hope you got some value. And I'll catch you back here in the next video pretty soon. Ciao.